Welcome to another edition of Real Estate Live. I'm Kathy Mae Martin, and I'm excited to be your host today. We got a great show for you. Have you ever wondered what the difference between a credit union and a traditional bank is? Or you thought maybe about joining a credit union and wasn't just sure how? My guest tonight is an expert from one of the local credit unions, and we're going to answer your questions live on the air. Check out the screen. You can comment to us on Facebook, or you can call the number there live on the screen. Stay tuned. Thanks for tuning in. Before we get into the show, I want to introduce my co-host this evening, Jensen Long. And Jensen is a licensed real estate agent with our property management department. She's for lack of a better term, a go-getter. Whenever we talk about hiring somebody, everybody says, we need another Jensen. That'd be hard to find, I can assure you. So thanks for being here, Jensen. Tell us a little bit about yourself.
So I started doing property management in 2016. It was my very first job out of high school, and I got my license in 2024. And it's a very rewarding job, and I wouldn't do anything else.
Yeah. You do an amazing job. I'm so glad you're here at Coldwell Banker. I think you've got one of your rental properties that you want to share with the audience tonight. Tell us a little bit about it.
Yeah, so this is 306 Northridge Avenue in Rockwood. It rents for $1,600 a month. It is a 3-bedroom, 1.5 bath. It's a little over 1,100 square foot. It does have a full basement. It's got a carport and a mudroom on the back. Here on the screen we're looking at the really spacious living room that it's got, and it's super updated, very clean. This is the full bath, and then this is one of the bedrooms. The bedrooms are pretty good sized as well, really.
Yeah, it looks like a great house, great yard.
And then that's the half bath in the master bedroom. And then the full-sized, full big basement.
Yeah, you got your laundry room already with your washer and dryer there.
Yes.
Just got to bring your furniture and move in. So how does somebody go about getting in touch with you and finding you?
So they can call the office at the number listed on the screens.
Yes, on the screen. We'll see the number there. Yeah.
Yeah, or just reach out and I will be happy to schedule a tour, go out so they can see the property, and then they'll fill out an application.
Yeah, sounds great. Well, give Jensen a call if you have a property that you need to rent or have a property that you're looking for that you would like to rent. Give Jensen a call. Her number is there on the screen, and I promise she'll do you a great job. Welcome back. As promised, I have Nicole McAdams, and she is the Vice President of Mortgage Lending with ORNL Credit Union. And we're super excited to have her today. We're going to get a lot of your questions answered. I promise you we're going to learn a lot. Before we get started, Nicole, just tell us a little bit about yourself and how long you've been doing this.
Oh, I've been doing this for quite some time. I know I look very young, but it's all the Botox, I promise you. But I have been doing it for over 13 years now. I started as like a part-time teller, kind of worked my way up through the financials until I found mortgage. And I was like, this is the one thing that I'm never gonna get bored with. It's amazing. It's something that rules are changing constantly. There's all these different things happening, and then getting to see someone get into their first home is life-changing.
It's rewarding. It sure is. And that is one thing about this business, and I tell all my clients is I love this business because I learn something new every day. It's a constant change, but you got to be able to adapt and roll with the change, right?
Exactly.
Keep a good pulse on the change. I know a lot of people have the question, what's the difference? What's the big difference between a credit union and a traditional bank?
I do get that question a lot, and I understand why. A bank is owned by its shareholders. Okay, it is a for-profit, and that doesn't make it bad. It just means it's a little bit different because they have to appease the people that they're serving, which are the shareholders. A credit union is not for profit. So although we can make a profit, we're not there to do that. The profit that we would make, and especially where I'm so lucky enough to work at, we put it back in technology. We find different things that are going to be better, such as like better fraud detection, better things to make sure that the members are having a good experience. But it's about member owned. You know, when we make big decisions or changes, there's a member vote, and your opinion and what you want matters.
Yeah.
And it's so much more different because I've worked at both, and being able to have the experience with the credit union and support of the credit union, you'll see the difference. So
Absolutely. Well, I can tell you enjoy your job. How easy or hard is it to join in a credit union, and what does that entail?
it's actually very easy. All you have to do is go into one of the local branches. Lucky for us, we have 19 different counties that we service. So for that, all you would have to do is go into one of the local credit unions. You can go online too. And as long as you live, work, or worship in any of those 19 counties, and you come in with just a few dollars, you're allowed to open a checking account.
Wow. Easier than you think. I know there's a lot of misconceptions that people think they have to work at a certain place in order to join a credit union, but that sounds pretty easy.
Yeah, I get all the time, oh, are you going to run my credit? No, we're just there to help you.
Yeah, is there like a membership fee or anything like that? No.
Nothing,
Okay.
no. We're just there to serve, and that's all we need from them.
Right, and you have a local branch here in Kingston
We do.
to service all your local needs. So, are interest rates typically better at a credit union? I get that question a lot from my customers.
Yeah, I would say it's not necessarily just that it's better. Most of the time, especially for, car loans, yeah, we're gonna kill it. You're not gonna find a better interest rate anywhere.
Exactly.
For mortgage, it kind of depends because it depends on the structure of the product. There's a lot of different things that go into it. Typically, it's more the fees. The fees themselves are going to be a lot cheaper at a credit union because there's certain fees that banks have to charge that we don't.
Yes, I figured as much. So what are some current market trends and what buyers should be thinking about right now? Because that changed last week. So.
I know. Everything keeps changing. And so that's why the industry is so fun, right? And it keeps us on our toes constantly.
For sure.
I would say as far as industry trends right now, I think a lot of people are worried about inventory. And because of that, it makes it more competitive, or people are always just waiting for the rates to go down in order to move forward. And I actually do have a promo that kind of goes with that to kind of help people get out of that comfort zone and be like, hey, we're here to protect you. We want to make sure that you're going to be okay. But as far as the inventory goes, obviously I feel like you probably even be better to speak into that one. But there's tons of stuff out there. You just have to kind of leap and give that faith and then trust that your institution is going to kind of back you up and make sure that you're going to be okay. Like right now we have the float down thing where if you refinance your home, we're going to let you float down one time for free. And guys, what that means is if you locked yourself at like a 7% interest rate, you can float down one time. So let's say 4 years from now, rates have changed and now the rates are 4%. We're going to let you change that 7% all the way to 4% at no cost to you. And it doesn't matter even if they go down to 2%. There's no cap.
Wow.
Yeah, it's amazing.
That's an amazing program.
I've been around for a long time.
That's worth tuning in right there. Oh, hey, we got a comment. Let's check it out. What loan programs are people not taking advantage of enough, if any?
I'd say honestly like local programs that are for first-time home buyers. There's a lot of grants and stuff out there that you can potentially look at getting, but it doesn't necessarily mean it's best for you, and you have to ask the question of like, why? I mean, even FHA, there's a great program with FHA, but it depends on your background if that's going to be the best program for you. So you really have to talk to your lender. I would also say USDA, it's a good program. You just got to watch out because it does run out of money, so you got to get going fast because you don't want to be in that
Or if
threshold.
the government shuts down sometimes.
Yeah, that tends to happen these days, right?
Yeah, every now and then, for sure. Okay, we've got another. That sounds like an awesome program. Thanks, Hunter. It does. Wow. They're going to be glad they tuned in just to hear that. Yeah.
I thank you for having us too, because honestly, to be able to talk about the programs, because people don't know what that means. When it's like no cap, it doesn't cost any. What does that mean? You don't know.
Yeah, you don't know. Well, yeah. Okay, so a lot of people have a misconception in the difference between a HELOC and a refinance. Let's talk about that for a few minutes.
Oh, I'm glad you asked this one. I actually just did a fun workshop with my team to really make sure that they're educating people about this, because I was even listening to a different podcast the other day. Not that I'm betraying you.
Oh, no.
But, there was a different one out there. And I saw like this advertisement for a HELOC, and I'm like, I'm glad that the general public knows what a HELOC is. It's an interest rate tied to your home, right? It's kind of like a glorified credit card. Because of that, the interest rate could be a little bit cheaper. Well, okay, it's a lot cheaper than a regular credit card would be, but you're using the equity of your home for that. The thing that people aren't thinking about is that is a short-term solution. It's not a long-term solution. And what I was trying to train my team about is you want to give people that security and know that, yes, okay, you might not want to touch that 2.5 first mortgage interest rate, but that HELOC interest rate's at 8%. You're like, oh, well, I'm only going to use $20,000. Okay, well, are you buying is this for a pool? Is this for a renovation of your home? Because the whole point is it should be like a credit card, the way that credit card should be used. You use it, and then you pay it back, and then that you can keep going with it. But if you're going to do something that's like $50,000, or maybe you're doing debt consolidation, which is really popular right now, you want to do a refinance. It doesn't matter if you're worried about your term, you can do a 20-year. If you're worried about the rate, we can show you a calculator that says how much you're still saving by doing this into the refinance. Even if you're going to lose that 2.5%, there's a reason for it. Plus, right now we have our float down promo, so
that is crazy. If you don't hear anything else today, write that down, tape it on your bathroom mirror, and the next time you think about getting a loan or refinance, does that also count for like somebody who wanted to refinance with you, or is that the same?
So yes, so the refinances right now, if they want to come in and do it, they get that promotion. It's just, we're just giving it to you. As of now, it started April 1st, and it kind of stacks with our other promo, which also goes with purchase transactions for primary homes. You get 0.25% off your interest rate just for doing the loan with us.
Whoa. Hey, we got another comment. I'm not surprised. Monica's asked, does ORNL Federal Credit Union sell their loans? Great question.
Yeah. So we work directly with Fannie Mae. So we are required to sell a certain amount of loans, but for you, the consumer, you're not going to be chasing down your mortgage statement. We keep all of our servicing. So doesn't matter if it technically gets sold to Fannie Mae, no matter what happens, you will always come to us and we will be the ones to help you. That's the only reason we do it, is to keep our license and to open up the portfolio to continue to lend.
Yeah, that's great. So it's really nice to have a local credit union that you can actually walk into if you have a question or pay your home loan. A lot of people do it online, but yeah. That is really a great service and a great question. We have another question. When does that program end? Tomorrow. You better call today.
Well, obviously we want to help you now. Right now the promo is going from April 1st until the end of the quarter. So I think that's June 1st? I believe that's when it is going right now. But we were lucky because we've had that 0.25% off purchase transactions since like 2 quarters ago, and because the board wants to keep helping and keep supporting, they just keep extending it. And then this last quarter, that's when they added it to the refi transactions as well.
Wow.
Yeah. We're so fortunate because we have people that listen, and that's why another reason I love credit unions, because I have so many ideas, and because I can walk into my boss's office and say, hey, have we thought about this?
Wow.
But I'm not going to take credit because she came up with these promos on her.
Oh, okay. Well, it's a great, whoever thought of it, that's genius. Hey, we got another comment. Tracy Lieberman, building is a great option since inventory is low. If rates go down during the build, can you take advantage of a lower rate? That's a good question.
It is a really good question. So what Tracy is talking about is a construction perm loan, okay? So that's when you go to like one of your local builders, like I know here we have Sapphire with Bill and Kelly, and I'm not allowed to have favorites, obviously, but they are amazing people, and I know they take really good care of their clients.
They said ORNL is the best, and I will tell you, they interviewed lots of banks and credit unions, and they praise you guys to the highest limit. They've been building for over 25 years, so they know what they're doing.
And their work it's exceptional. When I got to see their last model, I was like drooling. I was like, can you come build for me?
Yeah. We have had Sapphire builders on the program before, so you can go back to one of our recent shows and check them out. But call them. Call Tracy and Nicole, and we'll get you hooked up with ORNL Federal Credit Union.
For sure. To answer your question though, Tracy, as far as the build time, because it takes them time to build the home, especially beautiful homes like they build. Yeah. So it could take 12, 24 months, you never know how long. And because of that time period, rates could have changed, right? Like again, you never know what's going to happen with the world. Rates change constantly. So let's say you close that loan, because we have a one-time close program at 7%, but during that build cycle, let's say it takes 14 months, before you convert or modify over to a permanent loan, we are allowing you to do a one-time float down, so kind of like the other one. So if you're at that 7%, no cost to you, we'll be like, okay, today's rates are 4%, we're gonna take you all the way down to 4%, and then we're gonna convert that loan right over to 4% on the books, so you never have to do anything else but sign one little piece of paper that I created.
That is crazy good information.
It's a great question.
So tell us how you would help a buyer in this competitive market, and it's getting more competitive. We're starting to get more inventory. Position themselves to be the buyer that's selected for that home.
Yeah, I'm gonna be really honest with this one, okay?
Oh, please.
I love when someone goes to their real estate agent and they say, hey, I want to go look at these different houses, but I use this term, and I always say it as, I like to make my people dangerous. Like I want them to, when they want a house, they're gonna be the first person in line, and they're gonna have the right people. Obviously, that's having a good realtor that's knowledgeable and knows what they're doing. The second part of that is making sure that your finances are in place, because when you're up against another contract, you want to make sure that you're the one that they go with. And to do that, to make yourself dangerous, as I like to say, is it's not just going to get that pre-qualification letter, which is just your loan officer saying, hey, they're good. When they do that, they're just looking at your credit, maybe a couple income docs. They're not really taking the full scope of that. So I like to tell people, let's get you conditionally approved just without a home. So we literally will take that whole application, that whole file, every bit of information minus the property address, get it into a beautiful little package, and then send it to our underwriter. So the underwriter is the one that makes that final decision, is actually looking at it as if you already had a home, and then giving you that conditional letter, so that when you go out, you're going to be the most dangerous one there. Because Kathy's in a situation, you're going to see the different papers, and one person has a pre-qual and one has a conditional letter. Kathy's gonna be like, hey, you need to take this one. This one's already good to go, and underwriter's already signed off on them.
Yeah, that's great that you guys can do that, because that will take them to the top of the pile.
Exactly.
Yeah, that's great that you do that. How long typically does that take a buyer to get that turnaround from ORNL?
It's actually pretty quick for going through the cycle. I mean, of course, we got to get everything, which is always the fun part. We're financial institution. We got to get all the good stuff. But once we get that package and it's sent over, our underwriter's turn time is only 48 hours.
Yeah.
But in the meantime, if you've already found that house and you're not pre-prepared enough, we can give you that pre-qual letter in the meantime, and then the moment we get that other letter, we'll send it out to you.
Yeah.
But that's why it's really important to get with your bank before you start shopping.
Absolutely. That's great advice. And to have that conditional letter, that is, I'm telling you, that's powerful.
Exactly.
That's really powerful. What makes your loan process different than, can you think of anything that stands out that makes it a little different? Maybe your underwriting guideline. What makes it different?
Oh, there's so many different things. So kind of back to what we had talked about before, like a bank versus a credit union. A bank is very structured to where they have to follow like the Fannie Mae, the Freddie Mac, the government rules as far as what they can and can't do. There's no gray area. With a credit union, when it comes to certain situations, we can kind of look through the scope. The only thing is we also have to make sure that we're treating everyone fairly, right?
Yes.
So if we make an exception for someone, let's say, what's a good example? Let's talk about the CP program. So someone has a house in California that they're trying to sell, and because of their debt to income ratios, they need to sell that house in order to qualify. What we've decided to do, and it's for all of our members, as long as they don't have PMI, which is insurance, guys.
Yes.
But as long as they don't have PMI, we can actually exclude that first mortgage in the event that they're willing to sign an affidavit saying that they are going to sell the home within 24 months of the home being completed. So it's a way that we can do that, and banks can't do that. They're so much more heavily regulated. When we do stuff like this, it's because we're like, hey, we trust you. You're our member. We're going to take care of you the best that we can, and we know that you do want to sell this. You want to come live here. Who wouldn't?
Yeah.
Look at Kingston. It's beautiful here. Like, why wouldn't you want to? So we want to be able to give them more power and be able to do that. And because of decisions like that, we can make those calls to do the right thing.
Yeah, that's amazing. It's kind of like personal banking was 30 or 40 years ago, more like a handshake and a trusted client. So how is your underwriting? Is your underwriting different than traditional banks? Maybe that's kind of going back to what you just talked about.
Kind of. We do a structure that when the file is done, it's immediately going in front of an underwriter. Okay. It's called upfront underwriting. That's the lingo in the banking world, but it's going immediately in front of an underwriter to kind of help make that initial call. Because most institutions, it'll go from the originator to a loan processor and then eventually over to the underwriter. But when that happens, things potentially could be missed. And again, that underwriter's the one that makes that decision. So if they see something on there that maybe your loan officer missed or just didn't think about because they might be new themselves and they're learning, it gives you a faster turn to where you don't have to worry about that. And we like that because it's going to make the process of getting that loan closed faster.
Absolutely. So if somebody had your conditional approval and they make an offer, they get their offer accepted, is that a quicker close than a typical pre-approval letter?
Absolutely, yes. Because at that point, you're just adding the address, and then the only thing we're waiting for is that appraisal.
That appraisal, yeah, and they get through their inspection, that sort of thing.
Exactly.
Wow. That's pretty awesome. Well, I know you have less than perfect buyers, and you have lots of programs. Is there anything stands out that you want to mention that you guys do that maybe they can't get at a bank, or maybe they can, but maybe you do it different? Is there something stands out?
Yeah, we actually have one program that is a 100% program. There is no down payment. So that's one of our big ones. It's a what we call a portfolio product because no one else has it. They might have a different version of it where they might require more reserves or more this. This is our specialized program. And then I would say something that we're definitely known for in the market. Again, going back to construction, there's I'm on being recorded right now, but we have the best construction perm program out there. There's no one that even touches us.
Yeah. And I have heard that numerous times from numerous people, and you're hearing it here tonight. So if you're thinking of building, or maybe not sure if you want to build, I would go ahead and reach out to Nicole or ORNL and, get your questions answered. The call's free, right?
The call is free,
Yeah.
and we have such an incredible 10-year team. I have multiple people on the team that have been there for 30 plus years. It's amazing.
Wow.
And they're just there to help. And I think having that kindness and someone that just wants to take the time to answer your questions, like I pick on them sometimes. I'm like, were you just on that call for an hour? And they're like, well, she was so sweet. She has so many questions. And
Yeah.
I love that they have that.
Oh, hey, we got another comment. How does that 100% loan differ from a USDA 100% financing? Good question.
That is a good question.
Yeah.
So USDA is mainly for rural areas. You can only do it for very specific things, and there again, a lot of the time that potentially runs out. So even if you've been pre-approved for that program, you might potentially have to go find another house, or it might take more time out of there. It's also a government regulated program. So there's a lot of ins and outs, there's special appraisals, there's different things that have to happen. For our program, we don't have that. So it doesn't matter if it's in a rural area or if it's down the street next to a Kroger. It doesn't matter. It could be right there for you, and it's not just for first-time home buyers. Like, you can use it. So it's a great program. There's no additional fees. It's just one of our good ones.
Yeah, that's a good question. What can you think of a government regulation on a rule, just so the audience can kind of understand? There's government regulations that they wouldn't have with your typical, what can you think of one of those government regulations, debt ratio, those type things?
Yeah, it's a really good point. The credit score for that program normally, and it depends by the institution, okay? They have different things that they set, or like what they do is an overlay on top of the government program. So it could be like, hey, they needed to have a 640 credit score, where a different program, a regular Fannie Mae first-time home buyer 3% down, is only 620. So that might make a big difference. It's also about not just the score, but the credit history, because they look a lot more in depth into that, and they want to see what's going on, which FHA might be better for you, because if you don't have a lot of extended credit history over 2 years, or maybe you have that one late payment that we all had when we were 18 years old, they're going to look at that so much more harshly than a different program would. So that's where it's very common to try to get with your loan officer and see what's best for you before just kind of seeing what that might be. Another one would be that debt to income ratio. Some programs like FHA, again, depending on the place that you're at, they can go up to like 55% DTI, which is amazing. People, that doesn't happen with other programs, but some of these other ones could be at 43%, and especially in this world where your income is not a lot, and you might have those crazy car payments and the boat payment, because there's a lake out here and it's real pretty. With
That's
all
true.
of that, you have to make that work, and 43% versus even 50%
Wow,
is
that's
very different.
That is very different. That opens up a lot of doors. Now, do your loans have typical PMI insurance? Yes.
We do have one program that does waive PMI, so we can look at that for you. But honestly, what I like to say is, don't let that kind of push you or pull you in one certain direction. Kind of be open to it, because you never really know what's going to end up happening and what could be the best thing for you long term. Because I'll use my sister-in-law because I love her to death. And she's buying her first home, and she gives me little calls every now and then. And she's like, well, Nicole, what about this? Well, what about this? And I'm like, calm down, take a breather. What is the expert saying? Because they've seen your credit. They've seen what the history looks like, and they know exactly which thing might be good for you. Ask them to send you some scenarios. Tell me the pros and the cons. Let's get dirty with this. FHA could be a great program for things, but, it does have an upfront PMI and a regular monthly PMI, and depending on how much money you're putting down, you're stuck in that PMI for the life of the loan.
Yeah.
And sometimes they don't tell you all that. You wanna know what you're getting yourself into. It's a big contract. It's a huge commitment.
Yeah, it's a huge commitment, Vine. It's one of the biggest financial decisions people make in their lifetime. So you do want to research it, especially the agent process and the lending process, because as you can see from this program, there are lots of different options out there and different programs that may suit you better. So Nicole, our time's running out, but if you can leave the audience with one thought tonight, what would that be?
Oh, one thought. I have
Yeah.
so many thoughts that run through
Getting
my head.
qualified before.
Yeah.
Yeah.
I would probably say stop waiting. Just call a loan officer, get on the conversation, see what it takes to be a home buyer. You know, there's so many different things out there, and you know, if ORNL's not the one for you, call someone else. The home affordability in this market is so difficult anyway. You want to see at least you're on a pathway for that. Renting is great, especially if you're trying to get where you want to be, but have an end goal. Don't discount yourself. You can do this.
Wow. That was great advice.
I
That
tried.
was really, really great advice. I hope you guys listened. I hope you learned something. And for any of your lending needs, give Nicole McAdams a call. Her email address is there on the screen, and I can promise you she's going to do you a great job. So thanks for tuning in. I want to thank Scott Wilk, our Emmy award-winning producer with Wilk Productions, making this show happen. Tune in next week and we'll have another great show for you. Thanks for tuning in.